So this video we're gonna go over a couple of winning trades for me and where I made some mistakes getting out. Whereas I told y'all how to get out in some of my previous videos, either looking for sell side liquidity to get out after you have surpassed it, or buy side liquidity, or looking for fair value gaps that price touches and trades back against or back away from. So let's talk about that right now. At the end of this consolidation period, price ends up going to the top of this zone here, and we can move this out of the way. Price ends up getting to the top of this zone, breaching buy side liquidity, and then begins making a run. It clearly makes a dip below this sell side liquidity here that has formed, but then doesn't come all the way back up and begins to trickle back down. So as you see, we have here what ICT likes to call a low resistance, or we can get that back on the chart, a low resistance liquidity run. So one, the telltale signs of a low resistance liquidity run is when I say when price gets skinny. So you can see, like, it's a little bit difficult, like when price is really choppy, to tell what's going on, right? But then when price gets skinny, meaning that it's not choppy anymore, it gets linear, right? It gets linear instead of horizontal. And when it gets linear, that's when the price action gets going, and that's when we like to get involved, right? So if you can see here, I've got a very small fair value gap over here on a I think it's a 5-minute time frame. And let's go back. So we got extremely small, or on the 5-minute, it doesn't look too small, but there's even another one on the 15. But anyways, if you're looking on the 5, and I didn't take this trade, right? But this began the trade that I did take, right? So boom, price fills up into this fair value gap. It fills up perfectly, perfect symmetry. It does not, the close and the open of these two candles, it does not go past the top of that fair value gap. If you're looking, that fair value gap is formed here, right? Between these candles, right? Fair value gap, this gap here, and we go back across to where we were at, price does not surpass it. It trades back down after it's filled it in completely. So now you're thinking, oh, this could possibly end up in a trade. Now I'm not entering just yet, right? If I were gonna enter, where I'd want to enter is here. Now you get to 5 a.m. to 6 a.m. and there's times where if there's not a lot of news, price may move, between the 5 a.m. and 6 a.m. period, or begin its price moves. But really what I'd like to do is to determine where has price began to make that clean price action. We already got these touches to the fair value gap. Now we're looking here to see when price is going to start getting linear. Price starts getting linear here when we see that it comes up and it touches this area. It respects this order block, these two up close candles, right? And if we look before, highest up close candles, 1, 2, there's a fair value gap. What does the price do? Pulls up into it, touches the order block. The order block essentially just below the opening of this candle, and then touches the high of this fair value gap. Boom, it immediately goes down. That's at 5 a.m. Now you get the same exact thing here, except it doesn't even touch the order block, right? Actually it does for this candle. It touches the low of this order block here, these two up close candles, fair value gap. It does just about the midpoint, and ICT likes to talk about how if it's only going past the midpoint of that fair value gap, even better for us, because that shows us that it has an affinity to continue in the direction it's already going in. And as you see, it did, and as you see it continue to do the same thing, pull up into fair value gaps and continue downward all the way to the down part of this zone. Now, this is where I got involved. The next day, I'm looking at this zone here. Let's take this off. I just use these to understand what's going on in the Asian section. But this part of the graph, right? If we're looking at it on the 15-minute chart, we can see that you get a small liquidity run overnight in the Asian session, right? So we're looking right here. Let's look right here, because I took a trade here, and I'm going to go over it now. So right here, there's a little bit of treachery, I like to call it. There's a lot of chop right here, right on the 15 minute. So, but I as I was noticing, I saw that price had gotten here at the end of the day previous, the move that I just showed you, and had pulled up, but not really enough to where I felt like it was going to go back in the other direction. And as you see, price begins to kind of break out of this zone slowly. If we go to the 5 minute now, we can kind of break that down a little bit clearer. Now, what we see is that as price is starting to break out of this zone, what is it doing again? It's starting to get a little bit skinny. Now, at this time, price was getting skinny here. I was looking to get into the market, and it's like, that's exactly what I did. And what I did was I got in based off of the same premise that I've been talking to y'all. ICT's basic YouTube setup. I'm a mentorship student, but I mean, this YouTube setup is amazing. And I can use it in conjunction with what I learned from the mentorship. And so basically what happens here is that I got in prematurely looking at this order block, these 4 or 5 consecutive up close candles, and this fair value gap. I looked at it and I said, man, it's already kind of left it. I didn't want to miss the move. That was a mistake on my part. I got in here, and when the candle was way down here, and it pulled all the way up against me. So my stop loss was up here, and as you see, I ended up having to, I got in again here, but I ended up having to, and what did I get in on these? I got into some small lot sizes, and I got into basically 15 lots worth of trades, and ended up having to get out at break even here, basically because I didn't want price to get knock me out, and it looked like it was getting ready to go back in the other direction. But what ended up happening is, if you can see it, there's a order block here, and there's a few fair value gaps, right? So if we go back to the 15, we can see which fair value gap exactly I was looking to utilize. So boom, if we look here on the 15, there's a clear order block, these 2 up close candles, and a clear fair value gap. And essentially my synopsis was, I don't want price to trade above this fair value gap, and if it doesn't and gives me clean movement to the downside, which you can see on this candle it started to do, and that's where I entered, that's what I wanted to see out of this area. Now, it gave me some treachery at first. I was a little bit on the nervous side, I ain't gonna lie. But it gave me what I was looking for. And if we go back to the 5 minute, I can show you exactly which candle I got in on. So I got in here essentially when price had been, it had shown that it was going to break this level. So as it was showing that it was going to break after it done all this, pulled back into that fair value gap in the order block here, I decided, okay, I'm going to get back in. I had already gotten out, but I said, all right, I'm going to get back in on the sell, 10 lots. Let's see what happens. And essentially it gave me exactly what I wanted. Now, I was up $3,500, and this is where my mistake was. You can see that as price was going down, I was thinking to myself, okay, where can price possibly stop? And so I was looking for either fair value gap or sell side liquidity. Ultimately, I really wanted it to go down here to my level for sell side liquidity, which would have been these two, not so recent, but somewhat recent lows. And let's go back over this. So look, you see these relative equal lows. That's what ICT likes to talk about. I wanted these so bad, right? But you can't hold on to these ideas. You got to take what you can get in the market. I already showed y'all over here where I got out at the fair value gap, and I found myself a 5 minute fair value gap right over here that was perfect for an exit. Now, in consideration, I was thinking I can be out of this FTMO challenge with one shot, one kill. And I would be so grateful. But what I should have done is just got out, because I knew that this was an area, this fair value gap could have been a targeted area that price might turn around near, right? Otherwise, it was going to go straight to this relative equal low. Guess what that mug did, man? I'm going to show y'all the perfect symmetry in the market that you got to pay attention to, and you got to just be humble and take your gains, okay? Because price is going to give you a chance to get out. And so essentially what happened was, as you can see, I left my trade in, hoping that price wasn't going to overtake this area, and that essentially it would come back down and trade back towards the downside and get to my ultimate liquidity sell side liquidity level so I can get out of this challenge. I should have took the exit right here. As you can see, perfect symmetry with the top of that fair value gap. This is why these fair value gaps, I'm so glad he taught them, because they're so powerful. Fair value gaps are the essentials of where price wants to go in the market. They target them and they use them to move. I'm telling you. If you don't see it that way, okay, that's fine for you. But if you're studying ICT's content, I'm telling you, fair value gaps, order blocks, and the higher time frame bias within the higher time frame bias, because as you can see, all of my trades have been sells within the higher time frame bias. Even if they're wrong, usually if you're within the higher time frame bias, you're going to be correct, right? And so I'm looking here, I see it touch this area just perfectly. It doesn't even go past it. It goes up here, it stays down here. I'm thinking, oh, it's about to go down, and it doesn't. And I'm just like, man, I'm just gonna hold. And essentially it went and took me out right at my entry at 536. I had stops to profit, of course. You know me, stops to profit, ain't losing no money at least. And it took me out, and my heart was hurt. Not heart was hurt, but my pride was hurt so much, because I knew I should have took profit out here. $3,000 to $4,000, man. You gotta be humble and take that, bro. So that was a mistake on my part. But I was able to capitalize and get some of that money back with a similar move over here. So let's talk about it. Essentially, there was a similar move. As you can see, price goes back and kind of gets at buy side liquidity established by this point here. There's some buy side liquidity there, so it goes and reaches up into it and kind of touches the bottom of this overall higher time frame order block, not order block, but breaker zone, that bottom side of that breaker zone that I had shown you. So essentially I should have put this in 100% mode, but essentially what ended up happening here was that this morning, yesterday morning, Thursday morning this week, I was looking to take a similar trade, right? And you already know what was I looking for? I'm looking for that order block, boom, right? And how do I know which order block to select? Okay, how do I know? I'm watching each and every order block, to be honest with you. There's order block here. Price trades past it, doesn't trade back into it. You know, I told y'all about how we use the fair value gaps if they stay open to determine if we should continue with our bias, correct? So that's exactly that same stuff that I'm doing on the higher time frame. That's what I'm doing on the lower time frame too. And so if I can find where okay, it's over here. So as we're looking at this, you can see that price essentially had, after breaching buy side liquidity, had created an imbalance, a fair value gap that it never traded past, correct? And so as I've seen that, I'm seeing that, okay, price didn't trade all the way past this fair value gap. This is the clear highest up close candle order block, right? On the higher time frame, there's the fair value gap. There, look, price trades into the order block and the fair value gap, and then begins to make a downside run. So as you see, I got in on this candle, looking to possibly get out. Again, look at my mistake at my sell side liquidity that we talked about before, but my mistake was the same in this one, whereas I took this same trade in the euro, which we can look at in a second. But essentially, you know, with the same concepts as I use in every trade, I took the trade and ended up being about $3,000 in profit. I took the euro profit, but I didn't take this one because I was hoping to leave this one running, and I was okay with that because at least I took profit in the euro USD trade, and this one I was like okay with it at least trading back if it's going to hit me at break even or whatever. But as you see, I got in early and then ended up getting out because I wasn't sure, then got in again here, and it ended up clocking me out, you know, down here. But I could have taken profit after price reached basically the end of this fair value gap, because as you see, almost perfect symmetry. It closes right at the bottom of that zone, and then immediately it starts to go back up. So you got to take your profits. I was at $3,000. I should have took my profits in this one, so I could have been up $6,000 instead of only $3,000 on a day. But in the Euro USD, I took a similar trade, and y'all can see it tabulated here. And we'll go over cross currency analysis and how it helps me when I see the same things happening in Euro USD and GBP USD, and also the opposite happening in the DXY. We'll go over that. But essentially, you know, I took the same trade here. Price kind of ate up into me, but essentially this is the order block. We didn't have a fair value gap per se on this. But what was I looking at? If I didn't have a fair value gap, let's go to the 3 minute. What was I looking at? Okay, so if we go to the 3 minute, so I like to use the 5, the 3, and the 1 when I'm getting into trades. The 15 minute helps me to frame it, but the 5, the 3, and the 1 are really the ones that I'm looking at. So one, I just see that this fair value gap is left open, and these 3 up closed candles are the essential order block, right? And so as this one is left open, I see price doesn't want to trade up into it, and it begins to trade down. So that's where essentially I decided, like, okay, I'm gonna get into a trade. And it didn't eat up my stop. You see that there's a fair value gap formed here. Again, there's another order block, the most recent up close candle, fair value gap across from it, and price doesn't really trade up into it. And so I was kind of confirmed, and I really wanted to take profit at this zone, but I saw that I was up 3,000 here, so I just went ahead and took it here. And you can see that tabulated in my demo account, where I was able to take profit on these 2 trades. These are the ones where I was trying to go back and get some money back in the GBP after I didn't take profit, but I took a huge trade in my demo. I was able to capitalize on $8,000 in this one trade. So this would have been like an equivalent of a 20 lot size, whereas I only took the 10 lot size in my actual FTMO account just for risk sake purposes. But anyways, I was able to make that amount here and about half of that, or just lower than half of that, in my FTMO account. And so, yeah, essentially, that's my trade breakdowns for y'all. Again, I'm using his public information, guys. I'm using his basic setup, and it's helping me tremendously, right? So I really would advise you to take advantage of ICT's public mentorship. It's over and above any paid mentorship that you're probably gonna get. I ain't gonna lie, you know, unless you like retail concepts, only retail guys that I really would mess with are like Raul, or like really it's just Raul, because I know he's verified with FTMO, and I know he's made 100,000 in a month. So if you're gonna take retail concepts, you're probably looking at him. There's another guy, Doyle Exchange. I like him a lot, but I mean, other than those guys for retail purposes, I'm looking at ICT for SMC content, y'all. Or maybe you're looking at me, I don't know, but I'm learning from him. So if you get anything from me, you get it from ICT, you feel me? So anyways, that's my stuff for y'all today. Hopefully that was helpful, and we'll catch y'all on the next video.